Warriors of price action and guardians of fundamentals. Welcome to Retail Recon. On today's Recon Reports episode, I'll show you a quick bull put spread setup I ran on Booking so you can see how the strategy works in practice. Let's dive in. The plan. Booking caught my interest because it was crawling near its 52-week low. On the chart, it looked like a support level may have formed and it seemed like a good candidate for a quick bullish trade. At the same time, there were no strong signals suggesting a big move to the upside. That put the trade into the high risk category, which meant I had to keep a close eye on it and be ready to cut it quickly if it moved against me. My thesis was simple. Booking had reached a strong support level and there was a decent chance it would bounce higher from there. Because the odds looked reasonably balanced between a bounce and a flat move, I decided to engage with a bull put spread. Since this is a credit setup, time is on your side. If the stock stays flat, you can profit from theta decay and you do not need a strong move higher to make the trade work. My risk rules for this setup were straight from the playbook. Keep a tight leash on downside movement and either close the trade at around 50% premium loss or take profits at around 50 to 75% unrealized gain. The engagement. On May 19th, I opened the trade. I bought three spreads consisting of a short 150 strike put and a long 140 strike put expiring on June 18th, 26 for a total net credit of 718. On the day of entry, Booking was trading around 153, so the short put was essentially at the money and the trade was set up very close to the action line. As mentioned, my plan was to play for the bounce. If that bounce didn't happen, I was prepared to close the position immediately if price dropped below support. Luckily for me, that never happened. Booking started climbing higher almost every day after entry. The setup quickly moved into profitable territory and reached roughly 50% profitability in a short period of time. Since the trade had already hit the lower end of my profit target, and most of the move happened shortly after opening the position, it made no sense to keep the trade open just to squeeze out a little more premium. It was better to take the profits and redeploy the capital elsewhere. I closed the trade on May 27. Now let's analyze the numbers. The outcome. On screen, you can see the full breakdown of all my Booking trades. The spreads were sold for a net credit of 718. Excluding commissions, trading activity resulted in a net profit of 463 or roughly 65% of the maximum credit captured. Using the capital at risk structure, that works out to a return of roughly 20% on deployed risk. To summarize, the Booking trade was one of those clean, simple setups without complications. The thesis played out nicely and there was no need for any intervention. That is exactly how you want most trades to go: controlled, profitable, and efficient. Those are the kinds of trades that compound well over the long run. And with that, we wrap up this episode of Recon Reports. If you found value in this mission, be sure to lock in your support by liking, subscribing, and following our movement. Thanks for standing watch with me today, and until next time, trade smart, risk sharp, stay on target.